obviously there is a lot to talk about when it comes to disability insurance. Huge topic of conversation when we do our workshops. All the time, disability insurance comes up almost without fail, and rightly so. I think as financial planners and at FinancialMD here, we're obviously big believers that that's a big part of a financial plan. But today I wanted us to riff a little bit on, let's talk about shady insurance agents or shady insurance practices a little bit, and what to do if you're just flat out, I don't want to necessarily pick this one person to help me find my options. I'm just going to go around, educate myself, and figure out which route to go to get disability insurance. So, Trevor, that's who we're talking to today. Part of the reason that we met is I think you did that more than anybody else that I had known up to that point, or residents anyway, as far as taking initiative, getting to know the disability insurance world and saying, go figure this out. So let's start with that. Give me some background on what'd you do when you decided I need to get disability insurance, or how did that whole process even start?
That's a good question. I think I looked it up in medical school, and
Yeah.
I misunderstood and thought that I couldn't get it at the time because I didn't have income yet.
Okay.
So I waited until residency, which was a bummer. I think I mentioned before that from lots of studying, of course, occasionally your neck gets a little sore, right? You're looking down all the time or whatever you're reading, and you didn't take a break because it was a lot, an exam was several hours or whatever. For whatever reason, I was like, man, I should I'm learning about how great medicine is and how it can really help us. And I want to be a good, healthy person as a medical student. So I'm like, you know what? Yeah. I'm like, yeah. And you're really, you do kind of get a little inspired. You're like, I'm going to take care of myself. So I'm like, I'm going to pop over to the University Health Service and get it's free visit. I'm going to pop over there, talk to a doc. They have physical therapists there, and they have PM&R docs. And so I made an appointment with PM&R. I was just like, yeah, this part's, always getting kind of tight on this side. Yeah, I'm right-handed. So yeah, like with the mouse and the computer or whatever, or like reading books, maybe I'm just like getting some strain or something. And so I got a physical therapist, and then I was like working on some stretches and stuff and strengthening exercises. Anyways, by the time I applied for disability insurance, the disability companies did not like that I had went to the doctor once for neck soreness. Yeah,
right.
So spine exclusion was one of the, I don't think they call it a rider. I guess it's called an exclusion.
An exclusion,
when you have a medical issue, pre-existing medical issue. It's not like health insurance where they're not allowed to add those. It's actually the entire industry of insurance is based around excluding people that are going to be potentially more expensive. So
that's how they're profitable.
Yeah, and they have to do that. People with more problems seek insurance more often.
And what do they call that, Trevor? Selective. What do they call it?
I was actually just
adverse selection. That's it.
Adverse selection. That's right.
Yep. It's I got that once or twice from a resident who was surprised, like, wait, what? They can exclude stuff? I thought they had to,
you're right,
cover everybody.
Yeah, for health insurance, fortunately, that was one of those good Obamacare things. Actually, I don't know anyone that disagrees with that. Imagine if you could do that for like your actual health insurance. It's terrifying. But for disability, they're just paying for your income. It's your income stability insurance, your guaranteed income. Anyway, so I had that exclusion for a while. I was blown away that I would potentially have to pay more and get less out of it simply because it didn't apply earlier before just a stupid doctor visit. So I had to wait 2 years, reapply, do the full medical underwriting again, got it removed because they can let you reapply later. You keep the policy just in case something else happens. And then when nothing happens, especially in that specific exclusion, they'll take it off for you. So going through that process, I was like, this is crazy. I didn't understand. I would ask lots of other people, hey, like, what, do you have disability? Nobody had it. I told friends about, wow, this is my experience. It was difficult. And
you're in residency at this point, or still?
I was in residency, yeah.
Okay.
And they were just like, okay, yeah, I'll deal with it later. Pretty much the standard response. I was like, no, you don't understand. They were like, well, maybe next week,
Yeah.
If I sometimes it's usually not like it's not a big deal. It's more like I acknowledge that that's an issue and I will put it off.
Yes. I will definitely put that on my to-do list. Thank you for bringing that to my attention.
I will definitely ignore that for a while and then I will get back to it later.
That's right.
Yeah. So for me, I was like so inspired that I was like, And I realized that, part of the cost of signing up goes to an agent. And I was like, I'm already thinking like, ooh, I wonder if I could make this into a little side gig during residency because I wasn't allowed to
Mm-hmm.
moonlight. That was
Mm-hmm.
the motivating factor. If I could have done some moonlighting then I probably would have just done that because like radiology residents, they make great money, like hanging out by the MRI in the middle of the
Oh
night, which
yeah.
I don't understand, but I would have been happy to sit by an MRI machine as an ophthalmology resident, but
Heck yeah.
so so yeah. Anyways, I got really into the whole insurance, and then applied for my license and took the test and everything because of that difficulty. And I wanted to help
Mm-hmm.
friends, family, whomever, to protect their income in case they get sick. And people
Mm-hmm.
talk about accidents, but we know that sickness, disease, ailments are really the main thing that cause people to be disabled and lose their income.
Mm-hmm.
Um, just they're way more likely than traumas and accidents, even though those happen a fair bit in young people as well.
Yeah.
So I may have gotten a little off track there, but that's kind of like how I got interested in the whole thing.
Mm-hmm.
How did I go about actually getting it? I think I just
Yeah.
went right to a white coat investor, and then
Okay.
I looked, and then I closed my eyes and I picked a random advertisement pretty much.
Yep. Yep.
I picked the one that sounded the nicest. I went with we
Okay.
talked about that, Set for Life,
Yep.
which was nice. It ended up just being, I think, one phone call and then a lot of emails, and then
Yep.
a phone call with the insurance company to talk
Okay.
about any medical issues.
The
The
health
more you
history
have,
thing.
the longer
Mm-hmm.
it is, or the more
That's true.
OCD you are about describing the details, the longer it takes.
Oh yeah. Don't
Another
do that.
reason to do it sooner because then you have a shorter phone call. Um, and then another phone call with, or maybe she just delivered. You have to deliver the final insurance thing as an insurance salesperson. I think she just sent it
Okay.
via email and then a DocuSign or something.
Yeah.
So it wasn't too bad. It was pretty easy. I'd say I didn't exactly know what I was getting. That's probably
Mm-hmm.
like a nice thing to figure out from. She was an independent agent as well, but online stuff is nice. It's convenient, but
Yep.
it's not quite the same level of personal trust and um, assurance that I probably would have appreciated. In that
Yeah.
I didn't really understand the riders, and it's not really in the insurance agents. Um, they're not incentivized really to make sure you understand. They're kind of incentivized to get on the next call or write the next email.
Yep.
So having good materials that describe the different riders and the pros and cons and things like that would have been kind of nice. Um,
Hmm.
there's a lot of riders depending on which company you're with.
Yeah. There are.
Catastrophic is kind of a big main one.
Yeah. How do
That
you
I
feel about catastrophic? Any thoughts on
Yeah.
whether
So
that makes
just
sense or not, or it's kind of a gimmick?
yeah, so first I'll just say, like, for disability insurance, the main thing, just for anybody that doesn't know a lot about it, which is probably most people,
Mm-hmm.
it basically guarantees a certain percentage of your income, even if you get disabled with certain qualifying conditions.
Yep.
So if I can't work, and depends on the company, some of the verbiage on this, some are a little more open, a little more strict. If I can't work, then I get paid. Usually it's somewhere around 65% or so of what my income is when I've verified it. And then
You're
there's certain
talking with
right.
like
Yeah.
employer
So
provided insurance or
if I
on the
make a
individual
hundred
side
thousand
too?
dollars, actually, even with like principal and
Yeah.
guardian in them, because doctors make so much, they start to cap it out. So like, yeah, if you make 80
Yes.
grand, they'll probably cover you up to pretty close to 80 grand. If you
Yep.
make 350,000, they'll probably cover you for 65% or so, up
Mm-hmm.
to maybe like 8,000 a month, 10,000 a month,
Mm-hmm.
because like even with a lot of bills and stuff, they know you can probably get by with 8 to 10,000 a month in income.
Mm-hmm.
Um, and the upside for covering more of it isn't that high for them. In the event you get injured, it's like outweighing injury, and we pay him $20,000 a month, and then we charge him like, you know, $300 a month, and then we maybe make a little bit extra. It's just, I don't think it probably bears out the risk reward for them. So anyways, you end up making or getting like 65%, and then they figure out like what things you can do with the policy. So those are called riders. So one is like own occupation. That's made famous and clear by a white coat investor, I think, pretty well. Doctors should have that one because you don't want to get injured and have the verbiage of your contract say, if you're injured but can still work at McDonald's, then we don't have to pay you. And
That's right.
The own occupation, when you have that slapped onto your policy, means that you, even if you can work in other capacities, if you can't work in your original capacity, like if I'm an eye doctor and I can no longer do eye surgery and work in the office and use the machines, then I get paid even if I could work at McDonald's.
Yep.
So that's one of the key.
So even if you do go do something else, as long as it is something else, truly, you'll still get your benefit.
That's right. So if I become, an insurance salesman or something, then I can get the same. I can get the benefit from the first job. What are the other main riders? So we were just talking about catastrophic. So one of the other big ones.
Yeah.
Oh, before catastrophic, the guaranteed.
I'd say the future increase option.
Yeah, future increase or guaranteed benefit update rider is what Principal I think calls it.
Yes.
Basically, like if you get a pretty good increase in your income, it can't be like teeny tiny little steps. Every so often,
but like year, residency to attending.
Yeah, every couple of years you have to use it, but and it'll expire if you don't use it. I actually just upped mine like 3 months ago because if I wouldn't have, I would have lost the benefit update rider. So you're gonna have to keep making more money if you want to increase it. That's
even if you got to report it every 3 years is I think what it is basically. And if you're making less, then they'll drop your benefit.
Oh, okay. So you just have to keep them in the loop. That makes sense.
Yep.
So in my case, hopefully we'll just hope that it keeps going up and that it'll be that way, but we'll see.
Absolutely. You and me both.
With COVID, I mean, we're seeing a lot less patients. So, some people might be landing in a weird benefit update period, honestly.
Yeah, no, that's true.
So that's one of the best. People say like, get it early so you can lock in lower rates. It's kind of true, but it's mostly that you're locking in your health.
Exactly. It's the concept of locking in your age and health.
Yeah, healthier you gets a lower rate, kind of, but mostly you just lock in your health so you don't get any exclusions and you can put your income, to the moon as you really grow your income. So then,
and that's what we talk about with disability insurance is that, they talk about, or if I am ever doing a workshop and I'm talking about the concept of disability insurance, they say, oh, well, we actually have some here at work. And I say, yeah, I know you do, but that's kind of irrelevant because A, you're going to lose it as soon as you leave here and go into practice or go to fellowship. And B, we're getting you this disability insurance policy. And what we typically do at FinancialMD is try to find the lowest disability insurance benefit just to save a few bucks, but still making sure it's, fully robust and things. So low benefit, but making sure what's important is that future increase, that benefit update, because the whole point is locking in your good health now so that you're kind of saying, okay, great. Now I feel better that whatever happens from here on out, if my health changes or something changes in my records or whatever, I still have that maximum potential increase I can go up to. So, for example, Principal's right now is like $25,000 a month, a monthly benefit. That if you got a small, say a couple $1,000s a month benefit right now as a resident, and you're good, you got that in place, that when you go into practice, if your income justifies it, no matter what happens in your health, you could get diagnosed with diabetes, you could get a shoulder injury, you could get a neck injury, like all this stuff, and they'll still when you go into practice and show them your contract or your pay stub, they'll still increase it, whatever you need. They can't look at your health anymore. So I definitely think that's the biggest one. And I got to hit this concept over and over again, that's why we're looking at disability insurance as a resident.
Mm-hmm. Yep. I mean, you
Nothing
can
to do
just
with
get
protecting your income now.
right. Yep. I mean, you do protect your resident income, which heaven
Yeah.
forbid something happened, you would still be glad you did that.
You're not going to be mad you had it, right?
You're not going to be mad you had it, but yeah, I think I was paying like 90 to $100 a month during residency for a low, for the coverage of my resident salary, which is like 4,000
Yeah.
per month. And
Well,
which is,
you were overinsured technically, because between that and your group benefit they gave you at Beaumont, you probably would have collected on $5,500 a month anyway.
you're probably right.
So that's what
That
they
would have
do,
been,
and that's what's different is insurance companies.
no, you're
Residents
totally
are typically
right.
the only profession. Well, they'll give you more than you make. They'll insure you for more than you make because they know you're good for it in the future.
Interesting.
Yeah, I had a fellow that was making, 65, 70,000, and Guardian was able to give him he could go up to $7,500 monthly benefit as a fellow.
Yeah.
And he did. And I was like, dude, you don't have to take that. That's pretty expensive. He's like, no, I want to. It's like, okay, it's fine. But it was like 300 and something bucks a month. But some people just figure they kind of understand chaos theory and statistics and just say, okay, but if something happens before I even go into practice, I'm going to want to be making a decent amount and not have to worry about finances because shoot, I've put in all this time in education. I want to get something for it. I get it.
Yeah, that little bit of monthly payment is a very nice safety net. I'm glad I have it. After just updating it, I was like, okay, feel a little better. I think it's got to be a little bit similar to what it feels like to pay off your student loans or like
sure,
your home or your car, and it's just you just breathe a little bit of just a sigh of relief. Like, okay, like even if I get hurt, I don't have kids yet, but when I do, like I have that policy and there's no exclusions and like they will be provided for. It's just like a good feeling like, oh, you don't have to worry about something happens. Just like when you get life insurance, you're like, if you do have dependents and you have that in place, you're just like, okay, like, God forbid something happened, but like at least, I would know that they're taken care of, even if I didn't know something was coming for me, I would know that they were okay.
Right. It's just it's getting over that hump of the avoidance of worst case scenario. People are like, I don't want to think about it. And that's what prevents a lot of people from looking into it. As a financial planner, yeah, we want to talk about the optimistic future and growing towards your financial goals and doing that stuff. Right. But I'm doing our clients a disservice if I'm not saying, okay, but what if that doesn't happen? And what if something bad happens? How do we make sure these financial goals still happen for you or your family if you're not around anymore? And you only have to talk about it once, and then you're good. But okay, so your experience with Set for Life was pretty good.
They got me the policy, like that's the goal. I'd say like definitely the most important thing for any resident or medical student is just get the policy. If you don't really want to spend the money on it, get the cheapest, lowest price you can with a good company. So don't skimp on the company, just skimp on the coverage. And then some of them have promotional prices for medical students. And they'll have like just really low monthly payments, which I mean, you're already paying for student loans. It's going to be cheaper than any book. It's going to be cheaper than a stethoscope, study materials, stuff you buy on Amazon. Like it's cheaper than all of that stuff.
Yeah.
Easily. It's the cheapest thing and you'll lock in your health. So the number one thing is just get it. Just get it like today, tomorrow, like this week. If you don't have it, just get it.
So talk about that.
Yeah.
Yeah, that's where I was going to go. Think about good companies. Yeah, that's what I was going to go towards.
There's
what makes a good insurance company?
Good question. Yeah, I mean, there's a few things.
I would say financial strength. Okay, stability. Like I guess we can kind of shortcut the process and say if you really wanted to look it up or ask the insurance companies what is their rating through a company called AM Best. That's a company that rates insurance companies, and they give the A's, A plus, B, B plus, B minus, all those kind of things. So when you're comparing, that's something to look at. And I wouldn't say go with the top rated company per se. I would just say make sure that the company or companies you're looking at all have decent ratings. And by decent, I want to say B plus or better, maybe A minus or better. So if we take, for example, we kind of look at 6 different companies. If we're getting disability insurance for our residents here at FinancialMD, we'll typically look at 6 different companies: Principal, Guardian, Standard, Ohio National, Mass Mutual, and Ameritas. I would say are the top 6 as far as how did we pick those companies? Financial strength and stability for sure. Obviously, all these companies have been around for 100 years plus in some way, shape, or form. So they're very strong in that sense. They're profitable. They're, all that kind of stuff. They've got just a ton of insurance on the books in the billions. But what also we're looking at is, secondly, do they have a good product for physicians? And a lot of that kind of boils down to the definition of disability. When it comes to that true own occupation concept, how do you know it's got true own occupation? And even between all those different companies. So those 6 companies we know have a pretty good product, a good language for disability of true own occupation. But even between those, there would be some that I might steer one way or another based on, take Guardian, for example. Guardian is probably the more expensive, but they've got very generous languages in their definition of disability. To be very specific, to say they've added on, you can basically get a physician definition of disability, and even a surgeon or a procedurally based specialty kind of definition of disability that says if I derive more than 50% of my income from a particular procedure and I can't do that procedure anymore, Guardian will consider me totally disabled, meaning they'll pay my full benefit if my income's down by half because I can't do a procedure. So I may still work full time, 40 hours a week, but
Right.
You tell me if you saw just did consults or kind of clinic type stuff, no surgeries, would that affect a typical ophthalmologist?
Yeah, I mean, it would cut your money in half at least.
Yep, half at least for sure, which is exactly what those types of policies are addressing. So that's where if that's a concern to you, you may want to look at something like a Guardian. Ameritas has kind of a definition like that. But if not, and you're just like, I just want to make sure it's covering me as a physician in my specialty, they're all going to cover your specialty. That's the big thing of saying this is what you trained for. You didn't necessarily get into medicine to be a doctor, although definitely, but specifically, I wanted to be a pediatrician, or I wanted to be a surgeon, or I wanted to be, whatever, like that's what you wanted to do. And it just happens to fall under medicine and doctor. So how do I make sure that if I can't do that anymore, I don't have to do something else? And that's where that comes in. So the good, strong company has a good product, good definition of disability for a physician. You want a company that's got a resident discount, frankly, because that's huge. And the big thing with these discounts is they stick with you for the rest of your career. You could get it in your last year residency or your first year attending. The monthly benefit's not going to be a whole lot different, but man, what you save over the course of your career by getting it during residency and getting that discount on it is huge.
Is it a percent discount usually?
Yeah, 10 to 30%, depending on the company and all those different things.
Oh, okay. I'm sure I got that. I just don't remember.
Yeah. So that's the big thing. It's, like we said, you're locking in your health so that you can increase later. You're locking in that discount. Why do you get it young? That discount's big. We've calculated it out before. Taking that extra money, not going towards premium, investing it, compound growth, all that kind of stuff. It's in the not high, but it's in the 6 figures of what you save by getting that discount and getting young. So I think future you is going to be glad you did when you look at how much you're saving. what else? So the big riders, I guess if I were to run through it, yeah, the future increase, yes, the true on occupation for sure. Beyond that, secondarily, I would get a cost of living or an inflation rider.
Mm-hmm.
So that makes sure if you had to go on claim at 35 and you're on for 30 years until you're 65 and it's a $10,000 monthly benefit, today that's nice, but 10, 20,
Right.
30 years from now, that's going to be nothing. And that's just the concept of inflation and goods and services going up every year. And just that's the way it goes.
Right.
So you want to make sure your benefit can keep up with that. Because if you'd been working, you would have gotten raises and at least cost of living raises each year. And you don't even notice inflation as much. But that's a big one. You want a partial or a residual rider. Different companies call it different things. This rider ensures that if you and again, different companies kind of have little tweaks in this. Like Guardian will say if my income drops 15% or more, then I can collect a certain benefit. Some say if it drops 20% or more. But if it's due to a loss of time or income, you can collect a partial benefit, which actually the majority of claims are partial claims. So you want to make sure you have that rider on there. Catastrophic, that one, I don't necessarily steer people towards that much. If they want it, fine. But it doubles your benefit if you, what is it? Basically, if it's like something pretty catastrophic, like you're lose an arm or a leg or an eye or are not able
I think
to
it's
do
partially
2 of the
like
6.
activities of daily living. I think like if you can't do a certain number of
Yeah,
activities of daily living,
2 of the 6 of the ADLs or something.
I think it's two, yeah. So like if you can't like feed yourself and you can't shower, then you would get like a substantially
It
larger
doubles it
amount of money per
typically.
month. Yeah, to cover the costs of basically like it's a nice thing because if something really happened to you and you didn't have family members around or somebody
Mm-hmm.
who's willing to put all their time into it and they would have to
Yeah,
not be working as well, then if you don't have that scenario, if you can't self fund that, then you can really end up in an assisted living facility long term.
that's a good point.
That's the way some people I've talked to have viewed it. Um, I had one guy, he and his wife both got policies, and he ended up just wanting to do catastrophic. That was the thing he wanted the most.
Mm-hmm.
Because he wasn't so much concerned about covering his income because he and his wife were both going to do very well in a internal medicine subspecialty,
Okay.
and so and I thought it was just like a good, really good, like sort of first principles thinking. He was just sort of like, we only need to replace one income. What are the chances both of us get hurt? Really, really low. So he was really going with the odds. He's like,
Okay.
but in the unlikely event that I do have something happen, like a stroke, um, the amount of money that it would cost me to like stay at home, and I want to stay at home, would be like it would be too much even for her like decent salary.
It would
That he
affect
felt
their
like that was
lifestyle
the
for sure.
thing.
Yeah.
Yeah, he felt like that would really like bankrupt them to a certain degree, and he was trying to like prevent losing all any sort of wealth that he would build. And he was like, even though the other things are more likely, this is the one that would be more devastating. So he ended up going
Yep.
with that. So, everybody's different, they're different goals. And otherwise it's an expensive rider. So usually I
Right.
don't necessarily recommend it. And people get sticker shock. But when he told me that, I was like, okay, you're talking me into
Mm-hmm.
wishing I had that on mine. I was like,
Yeah.
this makes really good sense. So
Yeah.
it's a goals, personal decision on what do you want to do with the policy, and the fact that it exists at all is really cool. I mean, the whole product itself, I got excited about it just reading about it. When I was studying like the licensing exam stuff, I was just like, this is insane that like as a
Yeah.
society we've created this product where you can for sure get an income over a lifetime, even if you're injured, because everybody is chipping in, and you get a great benefit if you're disabled. And on top of that, it's a whole industry, so it creates jobs. It's one of the, I don't know what percentage it is, but insurance is one of the big chunks of our GDP.
It is.
And it provides a great service for not for everybody. A lot of people are paying in, and they do make a ton of money. Those CEOs, those people at the top. I mean, there's a lot of money in the insurance industry,
Yep.
but it's a crazy product. Like, think about how many people on earth don't have access to it, and then
Yeah.
all we have to do is like send some emails, make a couple phone calls, actually take the time, and I'm guaranteed income for life. That's insane.
Yep. That's it. And
Yeah.
that's the whole point of insurance, and kind of, looking at your whole insurance portfolio as a
Hmm.
part of a financial plan, because what I want to do is I want to increase the likelihood of my clients reaching their financial goals no matter what happens.
Right.
So, homeowners insurance, car insurance, health insurance, life insurance, disability insurance, long-term care insurance, like all these things are there, that it's like, if you stand back and look at your portfolio, you should be like, yeah, okay, there's really not anything I can think of that would uh, take me off track from my financial goals long term. And that's a really great feeling,
Yeah.
because we've all run into people in our work or in our different circles where it's like, man, what happened to them that they just can't seem to make ends meet, or they just like, did something happen where it just set them back permanently? Have they never been able to be the same? That's tough.
Right.
Like, there, but for the grace of God go I, right? Like, are we all just kind of one situation or circumstance away from being like, I'm never going to be the same again financially?
Right.
And insurance, as crappy of a concept as it is, thinking I'm paying for something that I hope I never have to use.
Hmm.
Um, but I guess you're paying for that peace of mind. You and I, obviously, we know this stuff. We go to bed at night knowing that, like, no matter what happens, or how I wake up in the morning, or what happens on my way to work, we'll be okay financially. And
Hmm.
that's worth a lot to me and to you, I know. And
Yeah.
um, why we stress on this for physicians and residents specifically is because you spend a lot of time and money to practice medicine and do your calling and all that stuff, for sure, but to make a decent living too. And I hate for that all to change just because, oh crap, I went into the doctor and got diagnosed with whatever, and my future
Hmm.
looks totally different.
Right. Yeah, it's pretty cool stuff, and doctors can certainly afford it. I mean, that's the other thing, is there's really no excuse for not having it.
Mhm.
Um, it's not
Yeah, that would be
crazy
probably the
expensive.
last piece. We typically, when people ask, I say it's 1.5 to 2.5% of your income is typically what
Hmm.
we say you should budget for that.
Hmm.
Um, so
And it can be less. It can be less. Mine somehow is less than that, and I've got good coverage.
yeah,
Um,
that's on
it's
the
because
high
I'm
end, I think.
healthy, uh, and I have just one policy. We didn't talk
Mhm.
too much about that, but um, yeah, I guess I'll mention, like, I really like the strategy of having two companies just in case one folds. It's
Yeah,
diversifying risk. They're not going to fold, but because another company. So what happens? I heard a good podcast about that. But like, if a company fails, technically the state's supposed to have some money set aside. I'm sure every state is basically bankrupt right now, so
correct.
I wouldn't be like, I wouldn't bank on that. But other companies will buy them, and they buy those policies, and so
Hmm.
somebody would absorb that. Probably Warren Buffett or somebody like that would just buy it. I mean,
Yep.
and they could easily support that. There's tons of wealthy people that would just love to snap up an insurance company. So those top ones will be fine, but it's still diversifying risk. And then only certain companies will play well with each other. So if you have a work policy that you can't
Hmm.
take with you, they don't usually, like Lincoln or something like that. They
Yep.
won't play well with your principal or your guardian or your standard. They won't, you know, you can't combine the two. But if you do like a guardian and a principal, or a standard and a guardian, you can
Hmm.
combine two policies and potentially have more coverage. But um, I mean, that's probably the main reason to do it. More
Yeah.
coverage, and the risk.
It's that more
Uh,
future increased coverage. When we've talked about
yeah,
doing that with some of the higher paying specialties,
yep,
like, hey man, you're going to make $500,000 one year. And at that point, you're going to come to me and say, I've maxed out this policy. I need to get another one. What if instead of getting a decent one policy in residency, you got a smaller two policies, and then you've essentially doubled your maximum benefit potential, and you don't even have to worry about it anymore. You'll never have to get another policy because, if you're in ortho or cardiology or any of those kind of things where it's like you have potential to be in high six figures, maybe $1 million a year at one point, like it's not that far fetched. So
yeah. And the other thing that's surprising about having two is it's not any more expensive than having one, other than if one policy just happens to be more expensive. So you could cover yourself $1,000 with Guardian and $1,000 with Principal, and it would be about the same as $2,000 with Principal, maybe a little bit more, or it'd be a little bit less than $2,000 with Guardian because Guardian's a little bit more expensive.
Right.
So you don't really lose in the cost department in the monthly payments. And then some people have they don't have to do underwriting for their health because they're fortunate to be in a residency where the hospital has already set it up and made it so that all the residents automatically are insurable. So when you do a big group like that, it kind of dilutes the risk of several people having a disease.
Oh yeah, those are nice.
That's so nice. I wish my hospital would have had that in residency, because then I would just have both. I would have just kept it going. But
and I
it seems
tell
like
people
Standard
that too.
does that. What's that?
Yeah, I've actually, there's been a couple residency programs for hospitals that I've talked to about that before. Yeah, U of M, Henry Ford, and DMC have one with Standard, and it's a guaranteed issue plan. And I don't even think Standard will do them anymore for new hospitals, but they've grandfathered in that one. And
Interesting.
I tell people, because it's guaranteed issue, and I've seen this before where people apply and get declined. I'll say get that first.
Yep, 100%.
And then come see us and we can get whatever company you want. You can either keep both or drop that guaranteed issue one, but at least you've got coverage. Because I had an ER resident last summer that, shocking, because she said she was fine. She seemed fine, like nothing. She applied with Principal and she applied with Guardian, and they both, Mass Mutual and Principal, and they both declined her. And she was surprised. I was surprised, and we got a little more information, found out it was just a result of multiple little things that she didn't think were a big deal. But I guess maybe she was a type that just went to the doctor for everything, and they put everything in her records.
Yeah, and we do that as doctors because we see crazy stuff. And so that's locking that in medical school before you get medical student syndrome is a good idea.
Yep. And so she's got no coverage today. And she was in a residency where she could have gotten the guaranteed issue.
And now they won't give her that because the only reason they won't give it to you is if you've been denied elsewhere. So
that's right.
I talked to a friend that went to Michigan, and we were chatting about him picking up a policy, and he was like, actually, I found out our House Officer Association, they basically have a union there, which is really cool. It's called the House Officer Association. It was basically a union, and they that's how they got it. Is somebody like a while ago negotiated that. Anyways, he was like, I think I can get the standard policy without doing anything. And I was like, go get that first, and then apply for a second policy with Guardian, which has better terminology. So then he has the best of both worlds, which is great. And he can increase it higher, or he can just drop the standard one later if he wants to. But you can also just keep the standard one really small at like 1,000 or a little bit above, and just slowly increase it and keep the other one as a big policy. You can kind of like make one have a lot of coverage and one have a little coverage. So it's never really bad to have two. And then in case you're wondering, the insurance guy who sells it to you, by doing two policies, no, they don't really make that much more money. You'd think that they would make more money, but it's a percentage of the sale,
first year premiums.
Just the first year premiums, and then teeny tiny little bits of it after that. I don't know how much it is, but it's not a lot. Nothing
5 to 10%, maybe.
Really,
5
to 10%. Oh, that's actually a little higher than I thought. But yeah, it's not going to make them more money to do two policies. So they're not trying to
Mm-hmm.
upsell you. They're trying to get you more features, more flexibility down the line.
Yep.
If somebody's suggesting that, I think it's great advice
Mm-hmm.
to do that. And you lock in your health with two companies instead of one. So if you end up not liking one, or if you end up disagreeing with the guy who sold you the insurance, at least he gave you options.
Yep.
So it's great.
Agreed. Well, as usual, we've spent a lot of time making a boring topic fairly interesting, I think. And
maybe or an interesting topic boring, more likely.
I know we may have crossed that line. But yeah, so if this struck something for you guys out there, there's places you can go. There are certainly people you can know. You can ask other residents. At FinancialMD, we've got a team that does disability insurance every day. We're independent, and we'd be more than happy to shop that out for you. But again, we don't really care where you get it as long as you get it and you get it right and you get it now. So if you've got questions, shoot us those questions, myself or Trevor. And go to the website to find our info. And the Facebook group, if you go to the Financial MD community, that's the place where it's physicians only, sharing information, sharing ideas, and get educated. And if you're working with someone on the disability insurance or life insurance or whatever the case might be, or just financial planning, make sure it's somebody that you like and you trust and you feel like has your best interests in mind. So any other closing thoughts, Dr. Smith?
No, that's it. I mean, it's one of the most foundational things. It's sort of like the insurance equivalent of an emergency fund. That's how I look at it. Just get it done, and that'll help give you that foundation stability for everything for the future. And once it's there, it's even better than an emergency fund. You just do it, and then it just you have it forever. So as long as you keep paying,
there you go.
they'll keep covering you.
I like it. All right. Well, with that, have a great night, and we'll see you next time.